Amazing. So thank you all for joining, dialing in today. We have a nice panel of guests and a webinar topic today, exploring remittances, and specifically looking at remittances through the lens of a blockchain technology and how we can leverage this technology infrastructure to really expand and connect unbanked populations and individuals around the globe. We have a great panelist of guests, so I'll let them introduce themselves, but we have a group of fintech innovators largely expanding and building new frontiers in fintech and the LATAM ecosystems. I think we have a quick update here on this. Sorry, 1 second, and I will get the accurate slide. This is a classic update Google Slides, so no meeting would be complete without that. There we go. We had a little roster shift with our team at New. But I'll let Emilio Manzo jump in and introduce himself first. He's our analyst and the CFO from New.
Hello, Lanson. Hello, everyone. Thank you so much for having me here. Yes, I'm the CFO at New. We are a virtual wallet based in Buenos Aires, Argentina, and we are planning to expand to the rest of LATAM, Mexico, on the next few months. And we are focused on the gamer community, and as services, we have not only our fiat part, but also our crypto part of the business.
Amazing, thank you. Next up, we have Daniel Chang, who's the CEO at Beta Ramps.
Hey, Lanson, thanks for having me, and great to be part of this initiative and also to this webinar to show a bit more of remittances and all the underlying details. I'm currently Chief Executive of Beta Ramps. Basically, we help crypto companies to connect to Latin markets. Basically, we do cash in and cash out for crypto companies, gaming companies, and happy to be part of this panel.
Thank you, Daniel. Next up, we have Lucas Posada from Takanos, our CEO from Takanos. Thank you, Lucas.
Hello, everyone. Nice to meet you all. I hope we had some great conversations today. We are building a new financial infrastructure for the workforce of creators, designers, developers, and all kind of cross-border workers. And we are working mainly in Argentina right now, but also doing some experiments in the rest of LATAM. So basically, we offer solutions to access stable coins and other crypto assets and improve their quality of finance in the day-to-day life.
Amazing, thank you, Lucas. And last on the panelist, but not least, we have Amparo Nalvarte Garcia from B89, CEO at B89. Thank you for joining us today, Amparo.
No, thank you. Thank you, everybody, for the invitation. I am Amparo. I'm CEO and also founder of B89. Our purpose is to create financial well-being without borders. So we are in the business of issue cards, Visa cards, and also we are in the business of cross-border payments. We're doing the last mile of distribution of money in Peru, Venezuela, and expanding to other countries.
Amazing, thank you. And myself, I'm Lanson LeChance. I'm a product manager here at IOV Labs, working to build the ecosystem and infrastructure around the Rootstock blockchain. So leading off, we want to lay the landscape a little bit around how we define and establish the context of what remittance and cross-border payments are. And so the first question we have here is, what is the definition of a remittance? What is the definition of a cross-border payment? And do you have any real-world examples of this you might want to share? Lucas, you want to lead us off here?
Yes, awesome. So first of all, like to explain very briefly on what we do is like we allow people from everywhere in Latin America to get paid while they're working or they're offering a service, mainly virtual service or like a digital service to other places of the world. It could be like inside Latin America, but most of the times is inside Europe and or inside the United States. And what happens there is that we have two typical use cases that I think it could help this definition of cross-border payments and remittances. That sometimes the worker is a fortune teller that has a client in like an individual client, and he just wants to process a $10 or $20 payment because he offered like a Zoom call. Its cases are like therapies or maybe a teacher that gives a class or stuff like that. So usually those kind of payments, we understand them on the ecosystem of remittances, but also we have companies that are based in the US or in Europe that has payroll in Argentina or has payroll in Peru or in Chile, and they have to send like 100 payments to an individual in Argentina, two different kind of individuals in Argentina, or 100 parents divided in different kind of countries. So what happens there is that we have to build different kind of infrastructure and connect different kind of services, because as you may know, like on ramping for individual is not the same as on ramping for businesses. So usually what we do is we on ramp the fiat whenever it comes from, and we distribute stable coins or even local currency through stable coins. So for us, it's a very clear difference. And the biggest challenge is like, how can we, like by the proposal that has Takenos, the main value proposition that is like, don't worry while working cross-border, is like, you don't have to worry how to get paid. You just have to use Takenos and everything will be solved. For us, is like the user doesn't think if he has to process a remittance from an individual or he has to process like a payment from a big corporation. For them, it's just like, I just want my money, or I just want my stable coins regarding to the money that I'm getting paid in this country. So that is for us the biggest challenge. Is like, how could we build this financial infrastructure that could provide like a seamless experience, but also could attach the complexities around the AML, compliance, like financial regulation in each country, and all the complexities that are around this kind of transfers.
Nice. Thank you. Yeah. So I heard really there, kind of I'm going to simplify some of this, a distinction. Remittance is often categorized as more P2P individuals, and cross-border covers more B2B. Amparo, do you have something to add or comment on that?
Yes, it's important to understand like the context of the person that sent money and the person that received the money related to remittances. For the person that sent the money, for example, it's a person that moved to another country to have a better work or better life, to offer something to their family that is still living in the place of origin, for example. So it's like a tradition that this person do every week or every month or every 2 weeks to go to a place and send the same amount of money. And the sense of community of this person, it's very important for them. No? That's in the case of the origin of the money. But in the case or the context where people receive money, in most of the cases, there are unbanked people because they don't have a good work or they don't have a good salary or whatever, but they are receiving money because in most of the cases, they are unbanked people. So the context of this type of payments are more than, the context is more important just that that sending one transaction. No, that's completely different with cross-border payments, where we have companies, where we want to pay salaries, where we want to send money to pay because we are importing something or things like that. No, the context is completely different in this type of payments.
And I'd like to add something that is very important of what Amparo is saying, which I think it's very aligning, is that something for us that is a challenge around the context of the people is how can we ensure all of our AML and compliance procedures, because sometimes it's like you find people that cannot like get to the standards that we try to match to work with international banks and stuff like that, because they don't have the documentation, or because like they were never asked of that documentation, so they get afraid. And we have to train them to, it's like, okay, it's like we are not like chasing you. It's like we just have to prove that you are alive and you're like a person, an individual, like in the place you are telling me you are. It's just like that. And it's but those things, like if you work like between the fiat and the crypto world, it's like it's very important to gain trust with your partners.
I'm going to ask you to put a pin in that, Lucas, because I think you're getting into some of the critical points in future questions. And I'll throw it to Emilio quickly if he has something to add, but then I would like to continue this discussion because I think you guys are starting to get into the layer of really where we wanted to explore here.
No, only just a little comment. Also, you said before that remittances are more peer-to-peer and cross-border are more B2B, and that's has implied the size of the transfer that we are talking about. In remittances, there are small transfer of money, and because of that, using a traditional method could be not so cost effective. And I think that that's one of the main reasons why we are here, and we are going to discuss that.
Amazing. Yeah. So I'm going to jump into the next question we have around what are the main challenges and opportunities we have with remittances in Latin America. And maybe I'll throw this to Daniel, have a chance to lead off on this one.
Yeah, so maybe we can kick off saying that banking systems, they operate differently in each country, and I think for me that's the biggest challenge of the existing system. So even though there are similarities among them, each bank or each central bank on a regulatory perspective, they establish different rules to move money, to manage liquidity, to manage transactions, so on and so forth. And because all of those differences, we need to have international correspondence to process those transactions. Usually those intermediaries are the bridges between the banks from two different countries, basically to mitigate the risks of double counting, double spending, validate regulatory and compliance adherence. But for some payment corridors, these intermediaries are extremely inefficient. And let me bring in an example. I think in Africa, it would be better to illustrate, I think, this use case. So my co-founder and I, we've been working to enable crypto on and off ramps in African countries. And during this process, one interesting fact that I learned was, if we look at the commercial flows originated in African countries, we have 30% of the commercial payments sent to Eurozone, 20% of the payments sent to other African countries, and 10% of payments sent to North America. This is the commercial payments flow. However, if we look at the financial flows, where which does not include or does not consider the end beneficiary, we see that 40% of the financial flow from Africa goes to the United States. So that means if a business in Botswana is sending money to another business in Zimbabwe, for instance, the chances are the money will probably go to the USA first, and then will be settled in Zimbabwe next. And there are two main downsides of it. First is the cost. So considering we have multiple intermediaries receiving a cut from the transaction to validate and do all the process. And the second downside is the time delay that a transaction could happen, which nowadays is caused by the receiving bank to review and validate all the transactions. So I think it's the biggest challenge is how to align this global ecosystem or global financial infrastructure into one model where we can have one currency or one asset, such as USD RIF, as we're gonna explore today, how we can have this as a standard and facilitate all the transactions and make it faster, cheaper, secure, and efficient as a whole. So I think that's my main challenge and concern for this whole process.
Thank you, Daniel. Yeah, a lot of interesting kind of data points and context you're gathering there, through the African expansion you're targeting. Does anybody want to jump in with additional perspectives, or should we move on to the next question here?
Maybe I can add that in Latin America, it's very important the real-time payments or near real-time payments. So if we don't have the correct infrastructure or if we don't have the correct channels, I mean, in most countries of Latin America, we cannot send like direct payments. We have to wait like 1 day or 6 hours or something like that. But that's a challenge. People in remittances, they are looking for real-time payments, and we are all working for that. It's still our challenge.
Yeah. I think that's definitely something that we've seen as well, is where the visibility and the user experience of speed in the remittance infrastructure is really lacking in many scenarios, and this is absolutely an area that I think we have an opportunity as a team here to address. So some of these points you raised previously, Daniel and Paro here, covering this question, but I'm curious to dive a little bit more into. In the existing remittance infrastructure, where are the failings or the issues or the problems that arise in traditional infrastructure to support remittances? Amelia, you want to jump in on this one?
Yeah, of course. I think that one of the things that Daniel said before is that every country has their own financial infrastructure, and that's one of the main pain points here, because it's not the same. It makes an impact in two main things. One is the speed. It's not the same speed in every country to make a transaction, and the other is the cost. Like is one of the key challenges here, and the G20 put a target of having all remittances with a cost of less than 3% by 2030. I think that in order to address that, you need to try to make like a global system of remittances with the same corridors and the same infrastructure in every part of the world. And I think that in that part is where traditional banking is very complex to achieve that.
Nice, thank you, Amelia. That's an interesting perspective for sure. Lucas or Amparo, do you have anything to add on this one, or Daniel?
Yeah. So one of the things maybe is because I'm pretty biased on my own industry, that is mainly workforce. But one of the main challenges we see is like how the different financial institutions talk among themselves. So the way they transfer information and the way they do it, it's pretty hard to match the expectations of the people. So usually when we do in border transactions, like a local bank transaction, so the experience is quite well. So you got like a good experience, because usually everything is under the same regulations and under the same like expectations. So every user has the same expectations on how he or she could get the transfer. But when you go cross borders, So two different countries start talking in the financial aspects. So usually when you go there, is like happens some things like like Daniel was saying, is like, oh, money goes to one country and then to another country, and it takes time and it takes fees and it takes stuff like that. And not even talking that if we are talking about Swift transactions. But what happens there is like there's so much lack of knowledge and information and speed and everything that we've just said that is so different than in-border transactions that it generates too much pain to the user. So the main challenge, I would say, for us right now is like, how could we match the experience to the same level as at least in-border transactions?
Yeah, that makes a lot of sense. One of my observations as we've been diving into remittances, a lot of the traditional remittance and banking infrastructure has so many layers of components, from the actual settlement to the transaction layer, right? And this introduces lack of visibility, intermediaries into the process that create both costs. As far as fees, as far as time in the transaction, but lack of visibility, right? There's kind of such a disconnect between where the actual asset or funds are being transferred to where the systems that are notifying are tied into it. And so this creates, from a user perspective, whether you're an individual or a business, a lot of negative experiences where you don't know where your funds are, where are they? There are additional costs in there. But yeah, I'll let you jump to this too, Daniel.
Yeah, I'm probably someone is making a business out of that. Like usually financial institutions do business with that, people not knowing what is going on.
Yeah, I'll play a bit of devil's advocate in here. I think blockchain solves lots of problems we have on remittances. But if we look just to a technological standpoint, I think international remittances will always be outdated, regardless of the technology we have available. So if we take, for instance, post-World War II, the technology available in there was telex machines, which has been used by the banks since until the 90s, I assume. And yeah, telex machines were invented. World War II were mainly used by business for business communication. Then in the 70s, we have the TCP/IP protocol, as we know today, as the internet was invented, and only a few years later, the banking system integrated into this protocol and started to make connections via APIs, and they start to communicate through the internet. And recently, same happened to blockchain. It was invented a bit more than a decade ago, but we're still in the early stages of enterprise and institutional adoption. So in my opinion, I think the industry may always push for adoption of new technologies until we get a point of where remittances costs are near zero, almost instantaneous worldwide, and 100% compliant to all different central banks. So I think it would take a few generations to get there.
That's an interesting point. So do you think in that context that it's, I don't know if it's a regulatory or just institutional momentum, and it's not really a technology problem. It's an operational problem. I mean, how do you view it through that lens?
I think it's financial institutions. They usually tend to be not the innovator side. They're not to tend to bring new technologies on board as soon as they are launched. They wait until the technology is tested, the regulation comes. So I think it's a mix of risk appetite of testing new technologies, but also the regulatory standpoint is also important. So I think it's a mix of both.
The other dimension, and I'm not sure who has a core thought on this one, but in remittance, one of the core components of a remittance flow is foreign exchange between different currencies, right? And I'm curious, kind of if you have any thoughts on how that dimension of a remittance transaction impacts the ability to support, and where liquidity in local currencies might be important, and how that impacts the architecture and implementation of systems, and where those pain points are for traditional remittance providers.
Yeah, I can take this one, I think, to start. So yeah, liquidity in a foreign currency, I think that's the main issue for the existing remittance players. So if we take, for instance, this is public, of course, you guys can see. If we take like MoneyGram's balance sheet, for instance, the biggest part of their liabilities is debt related to capital needed in foreign exchange currency. So basically, MoneyGram needs to have bank accounts or some sort of liquidity in the regions they operate, and this happens for all the major remittance companies. So you need to dedicate lots of working capital to maintain those assets and to execute remittance. And the beauty of the blockchain and the USD Rift that we're going to explore with you guys is basically the on-demand liquidity, right? Is that with blockchain, we don't need to dispose our working capital into a standby bank account just to wait and see if someone will use that money or not. So blockchain solves that on-demand liquidity, and having one common asset among the players. I think that facilitates the whole journey.
Great, thank you. I'm going to jump into the next question here, and this is now diving into our technology angle of how we look at the remittance use case. And I'm curious if anybody has any opinions or controversial or consistent with the blockchain narrative. Why would you say remittance is one of the more attractive use cases for blockchain technology in a fintech environment? I'm going to throw you on the hot seat, because I know that you as you've shared some stories with me around how Takenos has approached the stablecoin usage in your current business, not so much through a technology lens, but through meeting your business needs. And maybe that's an interesting starting point for this.
Yeah, sure. Sorry, Amparo.
Sorry. I mean, for blockchain, remittances is the most important use case, because, I mean, we can offer speed. I mean, people want money in real time. We can solve the liquidity that Daniel mentioned before, like on-demand liquidity. It's very important for companies that offer remittances. If not, you have to wait. You need to have that money before you send the money, and then wait, and you need a balance of money there. And it's also for unbanked people. So not every person is on the system. So if we have in the other side, people that receive the money, it's unbanked. Crypto and blockchain, it's a very, very, very good choice for them, or option for them. But we need to realize also that people that is unbanked, we need to understand the context of the people, because not some of them are digital. So they don't understand wallets. They don't understand what is a QR code, or the address of your wallet, or whatever. So as a company, our challenge is also how to make that simple for that person that is receiving the money. And they just want their money. They don't care if it's blockchain or if it's crypto or of whatever is behind that. But that's our challenge as companies, no? If we want to use blockchain, and how to make very, very, very simple for that person that is receiving the money.
Perfect. Yeah, thank you. Yeah, no, I'm 100% aligned with that. When we look at the obstacles to mass adoption of crypto, it's largely around user experience. And like you say, the everyday user doesn't care so much about blockchain. They just want their money. And so moving complexities like, wallet seed phrases and things like that, into a very seamless user experience is a key aspect of making this, enabled. Or alternatively, working with, fintech innovators like you guys that can help make this seamless for the users is really important. Anybody else have a comment or a perspective on what Amparo said or the question? Yeah, go ahead, Emilio.
Thank you, Lanson. What I wanted to add here is that I believe that blockchain offer an opportunity in remittances in two aspects. The principal aspects is that with stable coins, I believe that that was a very good solution, because otherwise, for example, if you use Bitcoin in order to make transfer, maybe the volatility of the price could be an issue for people trying to do remittances. But that is only one side of the coin, but it's a good one, because, for example, in our app, you can transfer from a wallet anywhere in the world to our wallet your crypto, and then you can spend it with your debit card, and that's almost instantaneously, right? You receive the coins and you spend in fiat currency, and I think that that's a very good thing for people in order to have liquidity instantaneously. And the other part of the coin is the use of blockchain technology for the settlement. And that's another incredible thing that blockchain give us today.
Perfect. Yeah, and I think you transitioned us nicely into this next question on, you're addressing how blockchain can enhance remittances and some of the challenges that it helps solve here. Thank you. And Daniel, I'm not sure if you saw a comment. I think the audience was having a little trouble hearing you, so maybe you've sorted that out. But yeah, so related to this point, now we're diving into the specific challenges that exist in the remittance, but how blockchain can help solve those. This is kind of the one of the key areas. One of the points that Amparo you had brought up, and I think others had mentioned too, is really this notion of financial inclusion, or unbanked individuals, right? And I'm curious if anybody has a perspective or comment that wants to elaborate on this inclusion that we have an opportunity to expand into. Yes, please go ahead, Lucas.
Thanks. So something that I believe it's kind of an opportunity, and it's I believe it's kind of a new concept around financial exclusion, is like how people are moving from their countries and their style being like this kind of regional citizen, not like national citizen. So we have more and more people that spend like 6 months in a country and 3 months in another, and then goes for a year to another country. And sometimes like people doesn't have like every citizenship where they live. So sometimes they are with the tourist visa. So and this like makes a new kind of financial exclusion, is like when people move. So we have a one of our users, it's a soccer player. It's an Argentinian soccer player. So sometimes he's hired by a Mexican team, so he spends some time in Mexico, and sometimes he's hired by a Peruvian team, so he spends some time in Peru. But sometimes it's just one season, and it doesn't like make the time to go towards all the complexities around like getting citizenship. So this kind of financial exclusion of people that moving around the region or in other region is like something that traditional systems and also all the banking systems do not understand right now.
Yeah, I'm with you, and I think you're also alluding to a concept that has really been on the rise the past year or so. partially due to one of our favorite crypto and Bitcoin bulls, Balaji, with the network state, right? The notion of these digital nomads and individuals not residing and attaching to a specific geographic affiliation. It might not, hit home on this traditional notion of financial exclusion and that area, but I think it's really important and also a big opportunity, right, to capture and build products and services for these personas here. So I think the final question here, and then we'll kind of wrap it up and bring QA. But when we're putting on our hat as a CEO or executive at a fintech, and you're looking at these opportunities for how you're capitalizing on emerging technologies like blockchain, right? What are some of the key things that you may be considering as, how do you establish, whether this technology, this blockchain is going to be viable and right for your business? Yeah, please, Daniel. Thank you.
Just checking if you guys can hear me now. Yes.
I think so. Yeah.
Thanks, guys. So I think for us is more adoption in terms of understanding the community, the environment that this blockchain has. What is the level of adoption, or understanding the types of businesses that are connected to this blockchain. I think that's a good indicator for us. But also on technological aspects, we evaluate TPS, right? Transactions per second, how if the blockchain can support, congestion, what happens when congestion happens, understand about the network fees, how does it go, and security and governance as a whole as well. These are things that are also important for us.
Great. Yeah. Thank you, Daniel. Any other comments from the panelists? And I also make a comment.
Yes.
Go ahead.
I mean, that's for as fintech, when we choose blockchain, we need to consider it if we will use the blockchain as a tool for our business and nobody cares and nobody knows, or if we will use the blockchain and crypto and everything as a final solution for our clients. So we need to understand in which word we're going to use. So that's one thing that it's important. And the other thing related to fintech companies, I mean, we talked before AML and compliance and things that are important, but also using blockchain, we can follow the transactions for AML also. So we can follow the money and see where the money comes from using technology and using blockchain. So that's also something important.
Yeah, absolutely. Great points. For any attendees, if you have any questions for the panelists or in general, feel free to submit them. We'll have a section for Q&A at the end here. Any other comments from you guys on this one? Perfect. So I'm going to take the final opportunity here to talk a little bit about what we've been doing at IOV and working with these companies on the panel here is really around looking at this remittance space and attempting not so much with a technology lens, but really with, there's problems to solve in this space, and how can we help better connect and build an ecosystem of remittance and enable this within a blockchain technology like Rootstock. And this is an initial overview of kind of the architecture that we're aiming towards and where we really like to build a next generation remittance network. We have on the left-hand side here sending organizations that are connecting to users or potentially businesses. And on the right-hand side, we have receiving organizations connecting to receiving users, beneficiaries, or receiving businesses. And a lot of these components these are traditional fintech infrastructures, but we're starting to plug them into the smart contract capabilities within the Rootstock blockchain with the RIF remittance escrow service. And this is a intermediate decentralized service that will aim to help support both secure transfers of funds, compliance requirements, regulatory requirements, auditability requirements, and trust requirements of the participants of this network, and allowing sending, receiving organizations in different countries to more easily access pay-in and pay-out destinations within this ecosystem, and helping to facilitate easy transactions, transfers through fiat to fiat on both ends of the architecture. And all of this is being done on top of Rootstock, which is the blockchain that IOV Labs is helping to build an ecosystem around. And Rootstock, for those of you that may not know, I'll have a couple points right here. We have a very close affiliation in concept and architecture to Bitcoin. So we not only use Bitcoin as the native asset on Rootstock, and so we don't have a dedicated native token to run the blockchain. We use Bitcoin to pay gas fees and operate the network, but we're also leveraging the security of the Bitcoin network. Bitcoin is the largest decentralized network in the world, and we're leveraging anywhere between 40 to 70%, depending on market conditions, of the Bitcoin mining infrastructure to also secure. So we have a very strong security story. We layer this on top of the capabilities for stablecoin infrastructure and helping to provide always-on networks with on-demand liquidity, fast transaction speeds, which we also know are very important for remittance, with low-cost transfers on a tech layer that is also compatible with other smart contract platforms. And so this is kind of where we're aiming to go. And I thank all of the panelists here today for their contributions and their continued work as we move towards this next generation of remittance network that we're looking to build. And so if there's any closing thoughts you guys want to leave with the audience, or if any questions from the audience, we're happy to take those at this time.
Yeah, I would like to say that it kept in my mind the logic that of what Daniel said today about history and about how technology at the end the new technology is going to be adopted at some point. So of course, maybe today we have a short-term view, and we want blockchain to be the main technology to be applied in all the financial infrastructure, but it takes time to change the status quo. So, but at the end, I believe that in a few years, this is going to be the mainstream technology in order to make transactions across the globe.
Yeah, amazing. I'm with you on that vision too, and that's why I'm here. But yeah, I appreciate that too. All right. Well, I think that concludes it. So thank you so much, you guys, for joining us and sharing some really valuable perspectives. Look forward to working with you further, and thanks to all of the attendees that came and joined us today. And hopefully we'll see you again soon.
Thank you very much, Lanson.
Cheers.
Guys.
Thank you very much, everybody. Bye-bye. Take care.